What happens when societies stop having enough children to replace themselves? In South Korea, the effects of falling birth rates are no longer theoretical. Since 2020, more than 4,000 elementary, middle, and high schools have closed their doors for good. Of these, 3,674 were elementary schools, once the heart of local neighborhoods, now standing silent. Another 49 schools are scheduled to close in 2025, a number that only hints at the scale of contraction ahead. The Ministry of Education projects the school-age population will fall from 5.07 million in 2023 to just 4.25 million by 2029. In practical terms, this means entire towns are losing their last remaining school, erasing a core service that once anchored community life. The pattern is not confined to remote villages. Urban districts and rural counties alike are watching their classrooms empty, with some schools expecting to graduate fewer than 10 students by 2030. More than 2,000 schools are projected to reach this threshold within the decade. Once a school closes, the loss ripples outward, families move away, local shops and bus routes shut down, and the social fabric unravels. For many communities, the closed school building becomes a visible marker of a future that has simply vanished. The pace of closures has accelerated, leaving little time for adaptation. Parents and teachers have protested, but the demographic math is unyielding. With fewer children born each year, the system that once promised opportunity and continuity now records absence and retreat. In South Korea, the birth rate crisis is not a distant warning. It is already reshaping daily life, one empty classroom at a time. Japan's age structure now tilts heavily toward the elderly. In 2024, 36.25 million people aged 65 and over account for 29.3% of the population. The number of centenarians, people aged 100 or more, has reached 95,119, a figure that reflects both medical progress and the scale of care required. By 2040, projections show the elderly share rising to 34.8%, meaning more than 1 in 3 residents will be over 65. This demographic reality is not confined to family life or individual households. It has become a daily challenge for the country's care system. Long-term care facilities now operate above 95% occupancy nationwide. In metropolitan areas, wait lists for nursing homes stretch for weeks, and new admissions often depend on the turnover created by death rather than recovery. Facility managers and government officials face a narrowing margin for error. The workforce available to provide care is shrinking as younger cohorts dwindle. The Ministry of Health, Labor, and Welfare tracks a steady decline in new care workers entering the field, while the demand for their services rises each year. The result is a quiet but growing crisis of service capacity. Per capita care hours are projected to fall by 15% by 2035, even as the needs of the elderly population become more complex. What was once a family burden has become a national infrastructure problem. Policymakers debate how to sustain public finances, pension systems, and healthcare delivery, when the balance between workers and retirees tips further each year. For Japan, demographic decline is not a distant scenario, but a structural test already underway. Across Europe, the consequences of demographic decline are becoming visible in the daily operation of essential services. Hospitals and clinics, once able to fill every shift, now contend with nurse vacancy rates that have hovered between 8 and 12% from 2016 through 2026. Physician shortages, too, have persisted at 5 to 9%, straining the capacity of even the best-funded health systems. In Germany, the Federal Ministry of Health reported a 12% increase in the surgical backlog in 2025. Patients wait longer in emergency rooms, routine procedures are postponed, and overtime has become the norm for staff already stretched thin. The pressure extends beyond healthcare. Manufacturing plants struggle to recruit skilled technicians as the pool of working-age adults shrinks. Transportation networks face driver shortages that slow deliveries and disrupt supply chains. In construction, an aging workforce has left open positions unfilled, threatening the pace of infrastructure projects and pushing firms to accelerate automation. These gaps are not isolated incidents or the result of short-term policy failures. They reflect a deeper structural reality. When birth rates fall below replacement for decades, the effects eventually surface as service delays, workforce burnout, and output constraints across entire economies. The demographic transition is no longer just a topic for academic debate. It is shaping the reliability and resilience of everyday systems across Europe. For many young adults in South Korea, the decision to start a family is shaped by a complex web of financial and social pressures. Childcare costs alone average about 1.4 million won per month for a child under 3, a significant share of household income, and a figure that rises sharply with additional children. Groceries add another layer of strain. Prices run 56% higher than the average across advanced economies, making daily necessities a persistent source of anxiety. Housing compounds these challenges. Rent and home prices in South Korea are roughly 23% above the advanced economy average, with Seoul's property market among the most expensive in the OECD. Securing an apartment often requires help from parents. 43% of young adults rely on family support for rent and deposits, and more than 1/3 continue to receive assistance even after moving out. These costs do not exist in isolation. The path to marriage and parenthood is increasingly delayed as young people pursue higher education and stable employment, often in urban centers where housing is scarce and expensive. Expectations around gender roles and work have shifted, with more women pursuing careers and both partners weighing the impact of long work hours on family life. For many, the calculation is straightforward. The combined burden of childcare, housing, and education makes early family formation feel risky, if not impossible. As a result, marriage and childbearing are postponed, and the number of children per household continues to fall. These choices, repeated across millions of households, help explain why birth rates remain stubbornly low, even as governments expand subsidies and incentives. The economic realities of urban life, not a lack of desire for children, are quietly reshaping the future of entire societies. Governments across developed economies have turned to immigration as a way to slow the tightening of their labor markets. Bringing in new workers can happen much faster than waiting for a new generation to grow up. And in sectors like healthcare, construction, and logistics, migrants often fill roles that would otherwise remain vacant. Yet migration is not a demographic reset. The age structure of a country does not rebound overnight, and most migrants arrive as young adults, but their numbers are rarely large enough to offset decades of low birth rates. The process of integrating newcomers into the workforce takes time. Language barriers, the need for credential recognition, and unfamiliarity with local regulations can delay their full participation. Housing markets feel the strain as demand rises, sometimes fueling political backlash and debate over the scale and pace of migration. For employers and policymakers, immigration can cushion the impact of population decline, but it cannot erase the underlying demographic momentum. The workforce may grow in the short term, but the broader challenge of an aging society remains, forcing governments to weigh how much immigration can realistically achieve against the limits of absorption and public support. United Nations projections now anchor the planning horizon for governments and institutions worldwide. By 2100, global fertility is expected to settle around 1.84 children per woman, well below the replacement threshold. The world population is forecast to plateau just under 10.4 billion, but beneath that steady line, the age structure of entire continents is shifting. The European Union is projected to lose about 100 million people by the end of the century, shrinking both its workforce and its consumer base. Japan faces a 30% drop in its working-age population by 2050. South Korea could see a loss of 17 million people by 2070, erasing a third of its current population. These numbers are not just abstract statistics. They shape the future of pensions, healthcare systems, public finances, and housing demand. The challenge is no longer just how many people there are, but how old they are and how societies will sustain growth when each new generation is smaller than the last. Policy responses now reach beyond one-time payments or tax breaks. Cash incentives alone rarely shift the underlying calculus for families. Instead, governments are expanding affordable childcare, reforming housing policy to support young parents, and introducing flexible work arrangements. Paid parental leave and job security during family transitions can ease the timing of childbearing, but often only at the margins. To bolster shrinking labor pools, some countries are raising retirement ages and investing in retraining programs for older workers. Targeted immigration can help fill specific gaps, though it brings its own set of political debates and integration challenges. Automation and new technologies offer partial relief for labor shortages, but cannot replace the breadth of a missing generation. Every adaptation carries costs, requires time, and faces resistance, leaving no simple fix for the pressures reshaping modern societies. Today, once stable assumptions about growth no longer hold. As workforces shrink and pension pressures mount, every sector faces a recalibration. The decisions made now about adaptation, innovation, and support will determine whether advanced societies can truly thrive with fewer people. The future isn't inevitable. It is being negotiated right now. Every crisis begins as a crack, small enough to ignore until it isn't.